Hey everybody, welcome to episode 8 of the Cash Flow Joe podcast presented by Pip's Path. I'm Pip Stellick, joined by my business partners Steve Hipple, Bradley Strack, and Sam Musa. Bradley, how are you doing this morning?
I am doing excellent.
Excellent. Steve Hipple, how are you, my friend?
Pip, how you doing?
I'm doing good. You doing good? That's
good.
awesome. Sam Musa, what up?
Every time.
Every time.
Every time.
I don't know what that even means.
Excellent.
We are here to help beginning investors with their first transaction. And also we help seasoned investors make more money and also do more deals in a safe manner with actually more leverage. Our company trains and mentors thousands of students all over the country to become successful real estate investors. Actually, we do that all over the world.
All over.
All over. For more information, visit our website at pipspath.com, where we have tons of resources for you to get started now, including your personal scorecard where you can fill it out and then set up an appointment with us to talk to us about where you're starting and what you need to do to get going. Today, we're going to be talking about some of the great tax advantages that we have as real estate investors. And the coolest part about property is that everyone that does property gets an opportunity to have some of the best tax benefits that are out there for investors, better than any other type of strategy. You don't get a lot of tax benefits by investing in gold or Bitcoin or even in the stock market. Real estate investors get some of the best discounts when it comes to taxes, the best options when it comes to taxes. Just simple things like, how would you like to pay 20 to 30% less on every gallon of gas that you buy? I know that even doesn't even sound real, but what's cool about that, if we do things correctly, and we're going to talk about them today, is we are going to be able to get a 20 to 30% discount on every gallon of gas that you buy. Doesn't matter what state you're in, doesn't matter what the price of gas is, literally doesn't even matter what gas station you go to. You're going to get a discount on every gallon of gas that you buy. We'll talk more about that. You're never going to take another vacation as long as you live if you're a real estate investor, because everywhere you go is a business trip. Now, I can't stand up here and say what you can and cannot write off because I'm not an accountant, Meals. But
And you're also not standing.
And you're right, I'm not standing. And I also cannot talk about all the other things that you can write off, like hotels. There's a lot of cool things, rental cars, that you're able to write off as a real estate investor that many people don't even realize. Now, what are we going to say? We're going to say you need to make sure that you're talking to your accountant. We're going to be talking about the rules of investing, and one of them is always be legal. And so we're going to do things in a legal manner, but we have a lot of opportunities as real estate investors to get some great benefits when it comes to taxes. But here's the disclaimer. Make sure you're talking to your accountant, make sure you're talking to your lawyer, and make sure you're always doing things legally. Always be legal, most important part. I like to use the Robert Kiyosaki mentality. It's not about how much money you make, it's about how much money you keep. If you're making $100,000, but you only get to keep $40,000 of that because your taxes are so crazy high, I know some of you guys going 60% in taxes. You'd be amazed what you're paying when you start talking about sales tax and income tax and all the different stuff that you get taxed on. And so there's a lot going on there, and we can minimize those taxes if we do it through the right corporate structures and we do things legally. So what I like to do is I'd like to start off by having Bradley talk about this, because Bradley, as a pharmacist, he's got a lot of initials after his name, so he's a smart fella. And as a smart fella, well, he is a smart fella, right?
He's a fella.
He's a fella.
He don't look so smart.
He's a smart fella. And I guess there's other ways you can say that, but I won't even get into those. But he's a smart fella. And he probably thinks that, with all his education, he can do this himself. Bradley, should you do your taxes yourself? I want you to talk about that. Expand on that a little bit.
Well, I've said before I'm a skeptic in recovery because of my analytical personality. And when it came to learning about taxes with real estate investing, I first felt, man, I have got to learn and figure out all these different tax advantages. If I'm going to take advantage, I need to know what they all are. But I don't know if you guys have ever picked up the annual tax book that comes out with all the tax updates. It's like 40 pounds and you need a trailer to take it home.
I've never picked that up, no.
I'm sure. But I don't want to pick that up either. And the problem was, though, in the initial way of thinking, I, of course, thought I got to learn how these taxes work. And, it really comes down to, well, what would the wealthy person do? The wealthy person isn't going to go get an accounting degree. The wealthy person is going to find the best accountant, not the cheapest, the best accountant, because you're going to get what you pay for with that. I want somebody who is going to pick that tax book up every year that's 40 pounds and a couple thousand pages and read through it and know what to do for me. But I don't want to be the guy that has to do that. I've had enough traditional education and expensive papers that collect dust on the wall now to realize that it's not about knowing everything. It's knowing who can do this for me.
That's an interesting way to look at it as a smart fella, as I said a little bit ago. Yeah, you're definitely a smart fella, but you definitely want to have professionals that are doing that. I think I've been told now, obviously y'all can Google this and you can fact check me if you want to, but I've been told, and I can't say that I've ever verified this, that there's like over 70,000 pages to the IRS Internal Revenue Code. Can you guys confirm that? I mean, have you heard that too, Bradley?
It's a lot.
Yeah, 70,000.
Sam's going to check.
I have no idea, but I know if you just pick up a book or even a piece of paper and you had 70 pages or 100 pages, I mean, how many pages are in a ream of paper?
Like, you need a dump truck to carry that around, wouldn't you?
Well, that's what I'm
put
saying.
In your backpack.
It's talking about, he said he was going to pick up the tax code book. It can't be a book because how many pages are in a ream of paper? Anybody know? Is it 500?
500.
How much?
500.
500. Think about that. That's like 1.5 inches, 2 inches thick. And if that's 500, do me a favor, divide 70,000 by 500.
It's a lot.
Do that on your calculator. It's 140.
There you go.
140 reams of paper. If you print it on the front and the back, that's still 70 reams of paper.
This is just the updates, buddy.
6,871.
6,000.
Over 1 million words.
So only 6,000 pages?
6,871 pages.
And that's according to what?
Ask.com.
Ask.com.
I think Bradley
how long
could
ago
read
did you do
that.
that?
Right.com. That's
Right.com.
I'll have that read by Monday.
So take 6,800. So we just got to take a couple zeros off of there. So 6,800 divided by 500, or 6,800 divided by 500 is what?
13.
So that's 7
6.
reams of paper, almost 8 reams of paper, depending on their type, size, and font, if it's front and back.
That's true.
Front and back.
And now that nobody is listening, what were we talking about?
That was a Friends episode, front and back. Does anybody remember the episode?
I do not.
Oh, when Ross broke up with Rachel.
Oh
and Rachel wrote him a letter about how to get back together. And it was a number of pages, and they were front and back. They were on a break. Oh, my gosh. So we need to get off of the Friends concepts and talk about taxes a little more. But I want to keep this tax discussion light. Sam's over there knocking his phone on the table. You heard it when he set it down.
Yeah, Sam's here.
He'll be here all weekend.
How hard
folks.
is that to not do? I don't know. I'm shocked by that.
Check
So
the
Sam,
computers.
well, I'll come to Sam in a minute. Steve, can you talk about when you're getting an accountant, what are some questions? What are some things that you would do to talk to an accountant to get the right accountant?
If you're looking for an accountant for your investing business, so first of all, I would probably ask some other people you know are investors. If you got some other people you've met in a class or a networking event, just ask them, who do you use for an accountant? Do you like them? How long have you had them? Are you happy? Would you recommend them to someone else? And if they say they're a good accountant and they like them, then you'll maybe call them up for an interview. And obviously, if they don't have good things to say about their accountant, then keep asking around till you find somebody who can offer you. What you'll find is you'll probably find a lot of sophisticated investors, people like educated investors, probably use a lot of the similar accounting services. I know in our circles, a few names keep popping up of some of the accounting businesses that offer their services to investors. So when you're going to call up that accounting firm, make an appointment, they usually offer a free consultation. Sometimes you have to pay for a consultation. Either way, invest in your business and do that consultation, whether it's free or you have to pay. And if you're dictating, I guess if you're telling the person you're talking to, say, I want to do a corporation, I want to do an LLC, I want this, you're probably, if you're telling them how you want it set up, you're probably talking to the wrong person. Because the corporate or the accountants you're going to talk to should be asking you, what do you have going on? What do you have for assets? What are you trying to protect? And what do you want to do? And they can make some recommendations based on what you have, what you're starting with, and what you want to do, what your goals are in the next 1, 2, 3, 4, 5, even 10 years. They can make some recommendations. They can instruct you how you want to set your business up. You got to make some decisions. They'll suggest maybe an S Corp, C Corp, LLC. It all depends. but these conversations are more similar than they are different. So, but if you're going to an accountant and explaining what you want and they're not really picking up what you're getting, you're probably talking to the wrong person. I know way back when I hired my first accountant back home in Canada, I went to the consultation. I had to pay $400 back then. This was 13 years ago. I paid $400 to sit with the accountant. Well, that accountant is still my accountant today because they're that good. They take care of my Canadian business accounting, but they're that good. When I sat there 13 years ago, the 1 hour consultation was closer to 90 minutes. And I learned more about accounting and how to do the business from a book standpoint, accounting standpoint, a write-off standpoint. Pip mentioned some write-offs earlier in business trips. So all those things my accountant talked about during that consultation. So very worthwhile hour and a half of my life. I spent some money on it. Great decision. But I was also referred to that accountant I've been with for 13 years. I was referred to that accountant by another real estate investor who was doing the business years before me at a higher level. I just asked and I followed through on that advice.
That's awesome. And I think I'm going to put the disclaimer out here again. We're not lawyers. We're not accountants. But we do taxes, there I did it again. We do have our taxes done by, as Steve said, professionals. Now, I'll talk a little bit more about write-offs. I've got some stories about that I'll share with you. And so what I want to do is I'm going to bring it back over to Sam, because Sam, I know you talk a lot about who versus how kind of thing.
Yeah.
Can you expand on that
Sure.
a little bit?
So when I first got involved in investing, I assumed the best way to make money in real estate was to take all the players out that are involved in real estate, like accountants and contractors and realtors and mortgage brokers. Anybody that I could not pay seemed like a good idea, right? Fix it yourself, do it yourself. Unfortunately, you can't grow your business very quickly if you're busy trying to save money. I don't know how else to put it. So I shifted from trying to figure out how to do something to asking the most important question, I think, in expansion and accelerating your business is who can do it for me, right? And here's the insane part about all of that concerning specifically accountants. Your accountant's cost in your business is a write-off. So that means that automatically, by using an accountant through my business, I'm getting it for a discount of 20, 30, because it's pre-tax dollars. So if you can't do this business right, don't do it at all. If you can't get your arms around the idea of sharing the wealth, of helping other people build their business while you build your own, you should get out of the business. You should absolutely get out of the business. So do it right, don't do it at all. Ask who can do it for you, not how you can do it.
And I think the interesting thing about that is we all tend to, I'm going to try to do it myself mentality. And we've got to get out of that, because if we're continuing to try to do things ourselves, we're never going to grow our business. I think Steve said this on other podcasts. We're working in our business instead of on our business. We need to work on our business, not in our business. We don't need to become an accountant. Even if you are an accountant, if you really want to take it to another level, you're not going to do your own taxes.
Even if you are an accountant, you shouldn't be doing your accounting.
Well, you should have somebody else doing it for you.
That's how much you don't do things you're not good at and you don't like. So we don't live long enough to be good at all these different things. So focus on the business, like you just mentioned, expand the business, and that involves bringing people in. One of the great things about real estate, it's a team sport, and it's awesome to be able to coordinate something and build a business. If you want to go, what's the line, Bradley? If you want to go fast,
if you want to go fast, go alone. If you want to go far, go with a group.
That's it, and we want to go far.
And so I think that is exactly what we need to think about here. I'll give you an example in my own life, and then we'll talk about how do you pay less than 20 to 30% less on your gas bill or on your gas in your car. And as a real estate investor, we know that everywhere we go, there's property. And so everywhere we go potentially can be a business trip. Now, what do you need to do? You need to talk to your accountant about what you can and cannot write off. I don't have those things memorized, and we all know that laws change depending on who's there. As in different political administrations, tax laws change on a regular basis. As we sit here right now, we are I believe 3 or 4 years, at least 3 years removed from the Trump administration, but we're still on the Trump tax laws. And so as new administrations come in, laws can change. And so I don't want to know and have to memorize all those laws because, first of all, I might not even know how to interpret them, if it's a benefit to me or if it's a bad thing for me. But let me give you an example. I've been an independent contractor over the years for other companies teaching their people about real estate. And as I taught them about real estate, they would ask me to go to different places across the world and teach and speak for them. And so one of the companies always asked me to do is wear a suit. Well, as you can see, I'm not much of a suit guy, and I like to be very casual. So I'm thinking, if I wear a suit, got to get it dry cleaned. And so what do? My accountant always said, keep all the receipts that you got. Keep all your receipts. And so this is going back now 16, 17, 18 years. And so I'm going to these places and I'm wearing a suit and I'm thinking, well, I got to get it dry cleaned. I'll keep all those dry cleaning bills and I'll send them to my accountant. Now, if the law has changed since I'm saying this, then obviously you can understand that. But when I did this, I saved those receipts. I saved all of those receipts and I sent them to my accountant. And my accountant said to me, he said, you cannot write off dry cleaning unless it's a uniform. And a suit can be worn anywhere, to a funeral, can be worn to a wedding, whatever you want it to be. But it is not a uniform like something that has a logo on it. And so he said, you can't write off your dry cleaning bill.
Well, if you know Pip, he likes things clean. Well, not just clean. He likes things clean to a next level. You might even call him like clean. I don't even know what the word is for it. So
freak,
I think
a clean freak.
When the cleaners leave his house, it's like when you show up at the house, it's like, the cleaners are coming today. Really, it's like they just left. Like, what are they going to do? Just read the lines in the carpets? But Pip, I'm thinking with your dry cleaning bills, you probably wear a suit till lunchtime or maybe first break and change. Like, get that clean. I wore it for 4 hours. Get that clean. You probably had like 6 receipts after a 3-day event.
Either way, I always kept the receipts, Steve. You're exactly right. I'm a little bit crazy about cleanliness.
Oh, yeah.
It's not a bad thing.
The good news is, now that you have branded hoodies, when you get your hoodies dry cleaned, it may just be a write-off for you now.
It may be. And so I don't get these dry cleaned. I just throw them in the wash. So there we go. They don't need to be that crisp and clean, I guess. And so anyway, I kept all these receipts. And every year I'd keep these receipts and I'd send them in, and my accountant would say, well, Pip, you can't write off dry cleaning. And I kept doing that year after year after year. To this day, I still send all my dry cleaning receipts. Why do I do that? Because I don't know when the tax code may change and they allow that as a write-off. And it's not my job to know that. Whose job is it, Sam? It's my accountant, because they're my professional and they're the how-to side of it. I'm not that. I'm who's going to do it for me. So I keep sending all receipts. So I think the safest thing that I can explain to you is that if you just keep all your receipts, you don't have to memorize the tax laws. You have to just keep all your receipts, send them to your accountant, and they can determine what needs to be written off and what can't be written off. Let them make that call. And I don't think that's a hard thing to do. It's not something that we have to memorize a bunch of stuff. Now, I'll take that a couple of steps further, whether it's a business trip or anything like that. Bradley, you ever go on any business trips?
Every year I have to.
You have to. You don't have a choice.
I don't have a choice at all.
So H&R Block is not doing your taxes anymore.
Unfortunately, no.
I don't think they're going to be a sponsor on the wall for us, Steve, because I'm not a fan of the H&R Block or the TurboTax or those kinds of things. And I'm not knocking names here. For 95% of people in the country, those are perfect companies to use. Did you hear what I just said? For 95% of the people in the world, those are, at least in the U.S., those are fine companies to use. Why are they not good for us? Because they are not for investors. They don't understand all the write-offs. They don't understand all the business trips you have to take, because everywhere you go, there's potentially property, which means everywhere you go is now a business trip. Definitely. I love going on business trips, and everywhere you go, there's property, which means everywhere can be a business trip. Taking another step further, I don't know if these guys are going to jump in on this at all. It seems
every time I take a business trip, I see these 3 guys there with me. I'm not sure it's a benefit or not, but I see you guys on a lot of business trips.
It's definitely a business trip to be talking to us. That's
Come in,
awesome.
here's a business trip.
Exactly right.
Well, we just had a pretty tough business trip, didn't we?
We did.
Yeah, we did. What was that business trip? Was that the St.
Are we allowed to say it?
No, it's a secret island that no one
Secret
knows
island.
about.
It's our island.
Don't tell anybody, but
Yeah.
we were in St. Lucia for a week. Shh.
Sam
Oh
was there
my.
for a week. I was only there for 5 days. Sam, you stayed 2 extra days.
Wait
Sorry.
a minute.
It was
Sorry.
just
it was business trip, so
He
it was a
had seven-
business week.
He had
right?
7
was-
days worth of fun packed into 5 days.
It was immigration that kept him the day before and the day after. That's Sam has problems traveling. There's
He's
no
a
doubt
shady
about that.
guy.
Shady.
And so think about this we'll talk about gas for your car. Now, what am I going to say? Talk to your accountant, talk to the appropriate people to make sure that you can do this. But everywhere we go, we want to let people know what we're doing. I've said this on other podcasts. If somebody says, what do you do for a living? Your answer should be, I'm a real estate investor. And then whatever else you do is secondary. When you do that, your conversations are going to change with the people that you're talking to, guaranteed. If you say I teach high school math, but I also do real estate on the side, do you think they're even going to think about the real estate you do on the side? No, they're going to talk about the high school math. I don't know how long they could talk about high school math, but you know what I'm saying. And so, and now all the high school math teachers are gonna write in and tell us, how rude I am. That's okay. I know I offend. I'm an equal opportunity offender. I'll offend everybody, and that's okay. I'm good with that. I don't have a problem with that. I don't mean to, but I just say things like that, and I'm not trying to offend high school math teachers. All I'm saying is, whatever you do is make sure you say I'm a real estate investor first. Well, one of the ways to get that conversation going and one of the ways to start doing your business and letting people know what you do is put signs on your car that are so basic. And I know you've seen them. If you're interested in property and real estate in any way, shape, or form, you start seeing things that you didn't see before. And I guarantee you see people that have signs on the side of their car that say, we buy houses, stop your foreclosure. And before you were interested in real estate, you probably looked at that and said, well, that's kind of weird.
Oh, that was me 100%. I was like, that has to be a scam. Who is somebody that's got this cheap magnet on the side of their car that just says, we buy houses cash? Like, who would ever call on that? And I did, genuinely. That was my preconceived notion to it. Fast forward to after I meet you and I'm driving around with those cheap magnetic signs on the side of my car.
I was similar. I was very skeptical. I was. But you know what? Eventually I did it.
And it works. It's very basic marketing. It just lets people know what you do. I mean, if you have a pool service or you're a contractor and you're an electrician, do you see those guys that have their businesses on the side of their car? Have you ever seen a FedEx truck without a FedEx symbol on the side? I don't think so. They're everywhere. Sam, did you fly on an airplane here?
I did.
Yeah, and what was on the side of the airplane?
I don't know. It was inside.
No, what was on the outside?
At the name of the plane?
Yeah, and what was that airline?
I feel like this is a trick question.
No, what was the name of the airline? It said American on it, didn't it?
It was American, yes.
Or if you fly United or Southwest,
That's
the
true.
name of the plane is on there.
Well, Sam is still traumatized after all the
I
flight
am,
challenges
I'm
he had getting
traumatized.
here. He's trying to put that behind him.
I think you never know when someone's going to need you. By having your name available and visible at all times gives you the best opportunity to capture opportunity.
Everywhere you go can be a business trip because guess what? You have signs on the side of your car that say, we buy houses. You have signs on the side of your car that say, we buy houses. So now you're driving a billboard telling people that you want them to call you. Now, I know some of you are freaked out about when somebody calls you, what are you going to say? We'll talk about scripts and all that kind of stuff. Go to our website. There's all kinds of tools on there. You'll see some really cool stuff. But the key is understanding that you just have to put it out there. Now, I know what my accountant allows me to do. And that means when I buy gas, Sam kind of alluded to this earlier in the podcast, but when you buy gas, I'm buying that gas with before tax dollars.
Pre-tax.
I'm not buying it with after tax dollars. If you have a JOB and you make X amount of dollars every 2 weeks and you get paid your $1,000 that you make, for that 2 weeks or whatever week that you work, doesn't matter to me what your salary is, you have that $1,000 and it gets taxed. And you have state income tax in many states. You have federal tax that gets taken out and a bunch of other stuff. So
Purchase tax too.
all kinds of things. So that $100,000 or probably that $1,000 now becomes $750. And so now that's what you buy gas at. Okay. And you're already taxed on that higher amount at 20 or 25%, maybe 30%, depending on the state taxes that you have. Well, I make that $1,000 in whatever time frame it is, and I go buy gas first. And so now when I pay for that gas, so let's just say I pay $100 for gas, which literally I just filled up my tank and it was $100 today. Yeah. And so
Pre-tax.
it's crazy. But I now am not taxed on $1,000. I'm taxed on what? $900 because that's a business expense. So I am paying taxes after I have all of my expenses like gas and things like that. What about the insurance on my car? What about the windshield wiper blades? What if I want to get a car wash? I like things clean, Steve, so I have to get my car cleaned on a regular basis.
Probably there every day.
Yeah, well, I got to get the car cleaned. So guess what? All of those are write-offs. And as my favorite TV show, Seinfeld, Kramer would say, you got to write it off.
Giddy
up. That's right. You got to write. He doesn't even know what a write-off is.
And I'm not an accountant. So the tax code allows for you to, if you're improving or maintaining your business, that's a legitimate write-off, right? You can use that and say it can be defended, right? I'm using this to build my business. I'm using this to maintain my business. And when your business is selling property and you're marketing on your vehicle, there's going to be opportunity there, definitely.
Opportunities everywhere, and anything that you have. A car is a good example because you have lots of expenses with that car, and anything you can write off with that car, talk to your accountant. But tires, oil changes, all that stuff works. I mean, you'll notice every time I'm on some type of a podcast, every time you probably see me, my logo is on my shirt because now guess what I'm doing? I'm advertising my business. I'm always, as Sam said, improving my business. So these are all things that anybody can do. It's just a matter of continuing to do them over and over again and being able to mitigate or minimize your tax burden, because taxes, quite frankly, are probably going to be at least your second highest expense in your business. In many businesses, it's your highest expense. Some businesses have higher labor than others, so the labor could be more. But in this scenario, taxes are probably going to be your highest expense. And if I can do anything to mitigate that tax burden and do it legally, I'm going to do it. So, Bradley, any closing remarks on taxes as we go through this stuff?
Well, I mean, I think it should make sense that with even what you just said there is if we understand that this is most businesses' biggest expense, why do we love real estate so much? Because real estate is the asset class or one of the, if not the most beneficial with how many write-offs you get. So the government is telling us, here's what you should do to have the best tax advantages we offer anywhere. And it's real estate. So I think getting that and knowing that there's a game to play, don't try and learn the game yourself. Like we said before, find a good accountant that knows what to do. But even as you're beginning, I was still driving to the pharmacy for that first year, but I was getting the write-off of having the signs on the side of my car and all that sort of stuff. So I think getting into that and just having that basic understanding as you begin is very important.
You're 100% right, and it's really hard for me to try to communicate to people without verbal, because I'm asking Steve, you got anything you want to add to this? And he's looking at me like I'm stupid.
I can't hear you.
Well, of course you can't hear me. I'm not even saying anything.
And I'm here ready. It's like, I've always had something to add, except that one time.
Oh, that's why I'm asking. Because that one time I said, do you have anything you want to add? And he's like, no, thank you. What a great podcast that is. Yeah. No. What do you got? What do you got to add, buddy?
Some of you guys are gonna go out. You're gonna listen to this. You're gonna go talk to your own accountant, whoever that accountant is. Maybe you got a small business, and when you go talk to your accountant or your first accountant, and they're gonna say, "What do you want to do? Maybe you want to do lease options. Maybe you want to do short-term rentals. Maybe you want to do. Maybe you got some capital. Maybe you got to borrow your money. Whatever your situation is." Some of you guys are gonna talk to an accountant that says, "You know what? Just get extra insurance. Do it in your personal name. Get extra insurance. This whole LLC thing, you don't need that. Just get extra insurance. Do it your personal thing in your personal name." At that, I would just literally thank them for the time and go find another accountant. Because if they don't get, and this is exactly what happened to me. 13 years ago, I talked to my accountant who was in the family business at that time. Known this guy forever, great accountant, but he wasn't a real estate accountant. You want to find an accountant where 90% of their business, even 100% of their business, is real estate investors, because those are the accountants that will know their stuff, keep you safe, protect you, get you the best tax advantages. That's somebody who specializes in that field. Because someone who doesn't specialize in real estate is my accountant 13 years ago. He just told me, he gave me bad advice. And so I knew I had to go find another accountant. So do yourself a favor, find the right accountant from the very beginning, because 13 years ago, I started buying and selling properties, doing multiple strategies, doing flips, lease options, buying and selling. And that was 13 years ago. I think of all the properties I bought through my corporations over the years. Let me tell you, If I just did myself on TurboTax, I'd be probably losing a bit of sleep at night over, did I do this right? If I'm trying to do the taxes myself, did I lose out on some tax advantages or some depreciation? Did I really miss the boat? So I sleep very well at night, knowing my taxes, my accounting, all that stuff is taken care of by professionals, and that's what they do. So that's my suggestion, is go talk to the right accountant from the very beginning and use them.
Awesome stuff. Sam, you got anything you want to add?
Yeah, I just want to add that it's virtually impossible to catch somebody who's structured properly as an investor versus someone who's trying to do it without the proper structures, without proper assistance, help, like an accountant. So most people have a challenge building wealth because of taxes, as you mentioned. You remember that when you make a mortgage payment of $1,000, you're really having to earn $1,200 or $1,300 or $1,400 to make that $1,000 mortgage payment. Unfortunately, you get your money, the taxes are taken ahead of time. You don't even owe the money. Maybe we need to do another podcast just for that, to talk about the impact of that. But a business person makes money, spends money, then pays taxes on what's left over. An employee makes money, pays taxes, and then spends what's left over. And because of that structure, it's extremely difficult for the average individual, a middle-class individual, working class individual, to build wealth over time. It's just your money's taken away and you don't have the opportunity to use it like you can in a business. So you do want to structure your business properly. You do want to structure it as a business, not a hobby. And you want to take the advice that Robert says, which is, it's not how much money you make, it's how much money you keep. The tax code is a positive. Absolutely pay your taxes, pay the proper amount of taxes, and make sure you're following the law. But the tax code, in my view, is rewards and punishments. When you build wealth, create wealth, they let you keep the money. When you're destroying wealth, which middle class and working class people typically do, because unfortunately that's what they've been taught to do, you don't get to keep the money. They take it away. So definitely stop asking how to do this. Ask who can do this for you. And when it comes to taxes, get the proper assistance. Get a professional accountant. Get someone who can take care of that, and you'll sleep better at night.
That's great stuff, men, Bradley. And so I appreciate all of your guys' feedback on that, because that's a tough topic, and it's not fun and it's not exciting, but you guys did an awesome job of explaining some of the things that are out there. So on our next episode, we're going to talk about the concept of cash flow. Why cash flow is what we invest for in any deal. Because it doesn't matter if the market goes up, down, or sideways. We know that we can make cash flow on a property. That's what we like about it. So we'll talk about the difference between cash flow and appreciation and what that means to your business. But before we get out of here, I just want to say it again. If you haven't already, subscribe to the podcast on whatever platform you use. For more information on investing, go to our website at pipspat.com. Follow us on social media, PipsPat the Property and the Cash Flow Joe podcast on Facebook, Instagram, YouTube, and TikTok. Leave us a comment, give us a follow, and we'll see y'all on the path.